Welcome to Talk Tickers. Okay, so Enbridge just dropped what you could only call a bombshell of a quarter. They absolutely crushed analyst estimates and laid out a growth plan that has Wall Street buzzing. Today, we're going to unpack the numbers, the narrative, and what it all really means for the stock. Let's get right into it.
All right, let's dive straight in. Look, this wasn't just a slight beat or a little bit better than expected. Enbridge delivered a seriously decisive quarter of outperformance, both on the top and bottom lines. I mean, they sent a really clear, powerful signal to the market about just how strong their business is right now.
The headline number that's really turning heads? It's the adjusted earnings per share. It came in at 88 cents. That is a full 14% above what the consensus was calling for. That's a huge beat, the kind that has analysts scrambling to update their models.
And you know, it wasn't just an earnings story. Nope. The top line was just as impressive. Revenue of $12.32 billion? That came in almost 5% ahead of expectations. That tells you the strength is broad-based, coming from across their entire business.
And to top it all off, management backed it all up with a serious signal of confidence in the future, a 3% dividend hike. You know, when a company does that, they're putting their money where their mouth is. They're telling you, yeah, we believe these strong cash flows are here to stay.
So, the headlines look great, right? But for any serious investor, it's what's under the hood that really matters. And when you peel back the layers at Enbridge, you find a company that is just, well, it's firing on all cylinders.
This table really tells the story. We're looking at record full-year numbers for things like adjusted EBITDA and especially that distributable cash flow per share. Now, for a company like this, that DCF number is king. It's the actual cash left over to pay those dividends and fund future growth. This isn't some one-time pop. This is what sustained, strong execution looks like.
But, you know, this quarter was about so much more than just the numbers. Management laid out this incredibly compelling vision for the future, and it's really built on two things: an amazing history of delivering on their promises and a massive, massive pipeline of projects already in the works.
And this quote here from the CEO, Greg Evil, it's not just a soundbite. 20 years. Think about that for a second. For 2 straight decades, they have met or beaten what they told Wall Street they were going to do. That's how you build rock-solid credibility. That's the kind of trust you just can't buy.
And here it is. This is the engine for all that future growth. A $39 billion backlog of secured projects. Let's be clear, this is not a wish list. These are real, sanctioned projects that give you a crystal clear view into their earnings growth for pretty much the next decade. In a market that's starved for certainty, a de-risked pipeline of this size is, well, it's a golden ticket.
And the best part? This growth is coming from all the right places. They're plugged directly into the biggest trends out there. The insane power demand from AI and data centers? Yep. The huge growth in LNG exports? They're on it. Big tech going green? They're building renewables for them. So when management reaffirms their guidance, it's a huge sign of confidence.
Okay, so great results and an amazing growth story. But the real question is always, did the market buy it? Well, the stock's performance on earnings day pretty much tells us everything we need to know.
The stock popped a little bit right at the open, sure, but the real story is what happened as the day went on. You could just feel the momentum building as investors digested all the details, especially that $39 billion backlog. The buying just kept coming, and it ended the day up nearly 4%. That's a very strong, confident move.
And just look at this chart. It wasn't just the price that was moving. The trading volume was huge. Over 20 million shares traded hands. That's more than 4 times the daily average. That's a flashing sign of institutional interest. The big money managers were stepping in and building their positions.
And if you want to see where the real speculators were placing their bets, check out the options market. Call option volume, which is basically a way for traders to bet on the stock price going up, it just exploded. It jumped to over 35 times its normal level. That's a clear signal that traders are positioning for even more upside. All right, so that brings us to the main event here, the next call. We've looked at the past, we've looked at the present, now let's look to the future. What does all this mean for the stock going forward? What should you be watching for? So where does Enbridge go from here? Well, in our view, when you put together that proven track record, a growing dividend, and a massive de-risked growth pipeline, you've got an incredibly compelling case. And the great news is that the catalysts for more upside are clear in their near term. We're going to be watching for any announcements of new projects, especially in that data center space. We'll also be watching for key regulatory approvals that make that huge backlog even more of a sure thing.
Honestly, we think the momentum from this quarter could just be the beginning.
So, based on everything we've seen, our rating is outperform. This reflects the company's best-in-class execution, a deeply de-risked growth profile that stretches out for years, and its unique, direct leverage to the undeniable AI power demand theme.
That's our take on Enbridge's latest quarter. As always, make sure you do your own research. This is not financial advice,